Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it is Friday. It is Good Friday, and this is the weird day. For traders, at least, this is a weird day because the market gets it off. It is closed. Everything is closed. But most people don't get this day off. Only the banks get this day off, so I don't know, whatever. Hey, let's pick some music. Let's pick something a little bit different for today. What can we do? Christmas music? No, I'm just kidding. Isn't there one that's like a really ambient? Let's just do ambient for now. Come on. Oh yes, isn't that lovely? We can have a nice, peaceful, relaxing session where we can research some things, do a couple of little projects. Maybe we could look at that strategy that we were working on yesterday. I don't know. I kind of want to keep that one quiet. Anyways, I know it'll probably be a little bit lighter. I can see that it's already pretty light here on the viewers. So, good morning, Morgan. It isn't working for you, really. That's very interesting. So, when you run it, pull up the Ninja Script output screen. Does it print stuff into the Ninja Script output screen? The stop is going long at the end of the trade. Oh, did I did not screw something up, did I? Very lovely music. Okay, let's actually, let's just switch workspace. You know, there's not really much of a point in keeping Jigsaw open here because none of that stuff is right. So we're just going to close Jigsaw down here. I'll keep Rhythmic going. And let's switch to a new workspace. We'll close that. Cool. So let's close that window too. Auto rollover. Cool. Let's start it by opening up a chart, shall we? We're gonna open up a chart of, no, we want NQ. Want NQ. And there we go. There we go. 1 minute chart, NQ, candlesticks. Okay. We'll have our time stop set to 0 and we'll have the time to 1 58, right? PM. I should probably, so first thing is I should probably come in here and change the defaults, huh? Exit on session close. My entry. Ooh, this one it got screwed over. Entry, reverse entry, stop loss. Ba-dum. But it's not, that one's not going long at the end of the trade. So first thing is, let's come in here. Buy side equals true. Bring this over here. Make it really big. Buy side equals true. And then this, what is this down here? I think that I can just go with start time. Those all have to be capitalized. Year, month. Maybe I should be using my cool text editor. 01, or actually 13. 58. 0. Well, okay, yes. If you did not change the settings. So probably what happened is you just added it on and you didn't check the buy side box. New date time. Oh. Let's just do this. Datetime current equals datetime dot now. It's not a method. You know what? I always forget. It's different in every freaking language. There we go. So now, if I come in to strategies and I try and add it, yes, it has everything set correctly. Well, I mean, probably R factor should be 10, but. So you're just not putting in the right defaults. But let me come in and update the file that we put in. Ninja script. I'll just upload the newer version of it. I don't know where the old one was. There you go. Copy link. There you go. By the way, good morning, Andre, Rob, and Apol. So, while my mind is on it, I suppose. I was thinking, you know, what was it? Why did this come to my mind yesterday? It was like some Reddit thread or something like that. And I was like, By the way, did you guys see this whole thing with one of the big funded trader programs just going completely kaput? Like they were called Funded Trader or something. I forget the exact name. And like there was a bunch of sub firms underneath of them, and they're all just gone. Holy crap. So here's the videos I'm planning. We call this trader mistakes. I know these are the things, the biggest things I think hold traders back. That mistakes that traders make that hold them back. I think, yeah, my funded futures, I believe. And I say number one is funded trader programs. It doesn't need to be capital. Let me make that a headline. Dun, 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 dun. Because the issue I have with see, and I'm not saying like nobody should do funded trader programs. Okay, I'm not saying that. But what I am saying is that I think that they are good for a certain type of doing something, and most people are not using it correctly. Most people hold the funded trader programs up on a pedestal and say, this is like, we need to have risk management, and this is the pinnacle of risk management, and these are the kind of standards of risk management and performance that we should be trying to achieve. And that's just absolutely wrong. The metrics that they want you to hold to are incredibly risky. So for starters, based on our Monte Carlo simulations, most traders, a third of traders should pass, or rather a third of combines should pass if they were just using like set stops and targets and their trades were random, 50-50. 30% should pass. But we know that much less than that actually do. And why is that? Well, you have a $500 limit on the day and you're trading ES. It's very easy to blow that. And I see people pop in all the time. They blow their account the very first day. Like they don't even understand. And it's like, well, you need to go to micros. Like you need to, and then the issue is like the amount that you need to make. It might take you like 2 or 3 months, and you don't want to do that because then you have to pay the fee multiple times, right? So the targets and the risk that levels that they're trying to get you to trade at are actually very, very aggressive. And if retail traders just said, screw the combine, I'm going to get a small account, but it's going to be my account, and I'm going to trade very risk adverse. So I'm only going to risk like 1% of my portfolio a day, they would be so much better off. So much better off. And that is, I think, like the biggest thing that holds traders back, right? Number 2. What do we call this? SMC/price action. It's complete nonsense. The ideas behind it are complete nonsense. There's not any kind of empirical evidence backing up these methods whatsoever. And all of these guys, they are just focused completely on SMC price action, and they'll continue to go through these cycles and not have success. And the problem is you're trying to use a method that doesn't actually work. You're probably trying to hold like reasonable risk parameters, and you don't realize that the people that you've been listening to that seem to be having success with price action are just doing degenerate things, right? Number 3, ignoring the news. I believe these prop firms are more for scalping than day trading, swing trading being far away the no hold overnight. Well, yes, I think that's true. It is scalping, or they encourage you to scalp. But I think that that's kind of more like here's the thing. Where's the prop firm that allows you to hold overnight? Doesn't exist. Why doesn't it exist? I mean, yeah, you need more capital to hold overnight, but you could just require people to pay more to run the combine, you know, and just have greater risk parameters, right? Like every combine is the $300 combine instead of the $150 combine, right? Why wouldn't that work? Well, I'll tell you why that wouldn't work, because more people would pass the combine and the math wouldn't work out for them. Right? And that's the other thing is day trading. That's another big thing holding traders back. I mean, I day trade. Maybe that's what you've got to do given your risk parameters and the involvement that you want to have in the markets. But some of the best strategies that are available to us are swing strategies, you know? So like, and what would be number 5? I think when I was thinking about this last night, I had a number 5. There are a few with special combines, but I do not really trust giving my details to them and my money. Honestly, expect most of them to not hold the test of time. Well, you know, it's kind of curious to me, because when I started this, Top Step Trader was the only game in town, and it was a relatively new thing. Like, I think that Top Step Trader had been around for like a year or two before I stepped in on the scene. And then these other combines came along. Now, the guys, the funny thing is the guys that, you know, kind of soured me on combines, and I can't even remember their name now either. There's so many of them now. But, you know, the funny thing is that those guys are actually one of the better ones. But are they the ones that people said that they were trading and they weren't actually trading? Like they were funded, but they were trading a sim account? I can't remember which one that was. But anyway, you know what? I'm being ADHD and I'm losing the plot here. The point was, Top Step Trader is far and away the most reputable. They're the only ones that I like would really truly trust. And, you know, they're I think genuine. Most of them I think are genuine. Or at least a lot of the people at the firms, they're genuine. Like, they do want to help traders. I don't think that they realize that what they're doing doesn't actually help traders. Let's see here. They brought prop firms only to sweep of the credit card instead of going through recruitment, and most of them offer sim accounts until you show consistency and go through the live ones. See, I don't understand why there's not a broker. Well, maybe they are. Maybe they all do this and I just have never talked to anybody that does this. But, you know, why isn't it you're a broker, you have all of your guys that are trading that day, and you know all of their stats. You keep track of all of their stats and you see, you know, who does well in this situation, who does. And then in certain times when you expect them to do well, you give them more money, you know, and you could switch it around. Like you wouldn't, and that way it wouldn't be like you lose a combine, for instance, right? Like you could be given the money for a day or a week and you lose that, but then you don't lose the combine because you're still trading your own account and you just keep trading your own account. And then maybe later on they come back and are like, okay, now we think now is a good time for you to again, and yada, yada. Right. And then it is like, you're a prop, then it's really more like a real prop firm, you know? It's a real prop firm where you buy in yourself and they provide you all of the materials and stuff that you need to do well. Apex does at least offer unlimited payouts after 4 consecutive events, and then they copy your trades via API while you're still on a sim. Okay, so you're right. Apex... I was gonna say Apex seems like one of the better ones, and they don't actually do live trading. So like I I wouldn't use them anymore. It's kind of funny. Okay, now I remember what triggered me. That's so funny. Okay, what triggered me was I was on YouTube and there was a new video by Imam Trader or whatever the deal is. He was talking about, and I didn't even watch it all the way through, to be honest with you. But he was like, I don't think that I'm a consistently profitable trader, but I am funded at the current time. And, it was going through, and then he said, that's why I have an affiliate link in my video description. So this guy, he spent all this time like bashing on other creators and this, that, and the other. But then he said, I'm going to have, and he makes a big deal that he's like, I'm not selling a course. I'm not doing this. I'm not doing X. I'm not doing Y. And he has a funded trader program affiliate link. And like the whole thing is, for me, I think affiliate links, you want creators to be able to benefit from making content. One of the things that drives me crazy the most is like you're creating a community, you have a subreddit, right? And then you say content creators can't post on this subreddit. Well, great, then you're never going to get any content. Morons. It's just crazy. I understand like people self-promote, but like, look, people can upvote and downvote. Okay, if it's bad content. But if it's good content, we want that to rise to the top. You want people to see that, right? Okay. And that also means like if there are products and services that would be useful to the audience, you can have affiliate links, you can have sponsored videos. That's totally cool. But and I would probably do a sponsored video for a funded trader program if they gave me something and allowed us to do something fun. But affiliate links, no. Affiliate links, no. Because once you put the affiliate link in, the incentive for your channel is essentially to try and drive as many people into doing the funded trader programs as possible. And I don't think that that's the best thing for most people. I would rather you sell a course. I'm more likely to sell a course. I don't think I'll ever sell a course. If I was going to do a course, it would have to be something where like, I'm available and I'm like mentoring everybody in the course, right? Or it's like in person or it's like a virtual conferencing, but just a course where it's like, oh, here's the videos. And then I would never do that. I don't think that I ever do that. I would write a book. If I was going to do that, I would make a book and I would publish a book. Okay. But I would rather you have one of those education programs or something like that than to have the link. And it was like kind of pissed me off because I kind of had seen this coming, right? I was like, I think that this guy is just bashing on other content creators to elevate himself, but he's really no different. He wants to make more money from the YouTube channel, and he doesn't really care about what it means for his community, And that's why I was like, okay, let's make another video. I haven't harped on the funded trader program stuff for a while, but I think that that's the number one mistake that people fall into is they think, okay, I'm coming in. The best way for me to start is a funded trader program. And I really think at this point, the funded trader programs are the biggest thing holding retail traders back because it teaches you risk management benchmarks that are not appropriate for most styles of trading. Okay, can you look at the March 23rd trade and tell me what's going on? I don't understand the fill on the reverse entry. Okay, so where are we talking about? We're going to have to go way over here. I need to go further back. I don't have enough days. Let's do 90 days. Third. Okay. So let's see here. Oops. Okay, that just looking at that right away, that seems a little weird, doesn't it? Yes. Okay, so it says my entry, and then it gets a stop. It gets stopped out because the next bar goes down and it doesn't hit its target. And then the next one, it does a reverse entry. So it says it does a reverse entry in that same candle and goes down. That's interesting. Okay, so this right here is an instance where backtesting with a data series underneath may be beneficial, because I'm not 100% sure that it would have. Yeah, it's doing something weird here. Do you see what I'm saying? So like the way that it goes is it does this. It says, okay, here's the bar that I enter in on, because I always enter in on that bar. Okay. Then the next bar, I can see that the low of that next bar is below my stop, and my target never gets hit. So I know that that position gets stopped out. Okay. Then it goes to the next bar and it says, okay, now I'm supposed to enter in again. So where does it enter in again? It enters in at the top of that bar. It enters in at the top of that bar, which may not have actually been where you would enter in real life. And then there's that little bit there. Paying for an Apex plan is cheaper than like Ninja? Well, that's true. But again, like the risk parameters that you're trying to hold are kind of silly. Like, here's the thing. You want to make $3,000 to pass a combine, right? And here's what I'm saying. Come in and trade the micro treasury yield futures. And make or lose $10 a trade, right? So now you're doing something where, depending on how big your account is, you're talking about like 1 to 5% loss, right? How long would it take you trading that to get to the $3,000 that you have to pass a combine? Well, it would take a long time. If you were trading 10 times that size, it might take you 3 months. Okay, so if you're trading 1/10 of that size, you're probably not even going to get that in a year, right? Would paying for the Apex plan for a year or 2 years be cheaper than just putting $1,000 into account? No. And what I'm saying is, put $1,000 into an account and just trade $10 at a time. That is a more appropriate risk number for a retail trader. So like these combines are kind of encouraging people to trade like 20 times the size that they probably should. These funded accounts aren't looking for someone trading treasuries or anything with a low risk reward. They want YOLO. Exactly. That's exactly it, Spider. So what happens is all of the beginners come in. They think that the combine is like the way that I should be trading. That is like the standard that I should be trying to meet. And then they end up chasing strategies that are too aggressive. When if they scaled it back, they tried a less aggressive strategy, they would last longer. They'd have a much higher chance of success. No 100 lots on 100K accounts with leverage. Yeah, I mean, you have to go back and think about it. Like 30% in a year is like amazing performance, right? So that's like if we're on a $10,000 account and we make $3,000 essentially, right? And with the way that they do it, your drawdown is $3,000. So it's like you're trying to double your account in a month is what they're trying to do. Is the benchmark that they're putting you on. The benchmark that they're putting you on is basically double your account in a month. It's crazy. So I think that if we weren't funneling all of the beginners into the funded trader programs, I think that we would have more traders survive. I do. Yeah. Yeah, exactly. Like a really, really great hedge fund would return like 37% in a year. And you look at the profits that most retail traders are looking to make. Like just put that into perspective, okay? If you start with $1,000, you start with $1,000 in your account, okay? 30% would be $300, right? $300. Okay, so with $1,000 account over a year, you could make $300 net. And let's just say, for keeping things simple for you, you're a beginner. We're not going to count all of the data fees and the commissions and all that sort of stuff. Okay, right? So if you're only going to make $300 a year, right? $300 a year divided by like 250 trades, or sorry, 250 days. So we need to make on average 1.2 a day, right? So that could be like if your average winner is $10 and your average loser is $15, right? And then you get that over the year. And then, yeah, you could make $300 in a year, and that would be 30%. And that would be incredible, amazing performance. That would be like, maybe you should manage my hedge fund, right? You see how the numbers come out when you actually do use like reasonable risk parameters, right? And what the funded trader program would have you do is trade 3 micros and blow the account in a day. They use the futures because when you're doing stocks, you can come in and you can say, what percentage of my account am I putting into this stock? And then you base everything off of that, right? Like I can come in and I can say, I'm trading Donald J. Trump. I'm only going to risk 1%. So I invest $100, or I guess let's say that we're a $20,000 account because that's like the minimum, right? So I'm going to risk like $200 buying shares, whatever $200 will buy me. And then if I completely lose that, I completely lose that, right? Futures, it's different, right? You have to calculate like what the volatility of the instrument would be and how much I'm going to win or lose. And they kind of take advantage of that to deceive you on what risk you should actually be taking. Oh yeah, you're right. I should have said 25. Well, you can't compare a fund to a professional trader, a pit trader, or a day trader. Well, I would expect that, let's not say expect, but a beginning retail trader with $1,000 account, if they are doing successful, they actually stand a pretty good chance of making more than $300. Probably because they're over leveraged, but still. But the point is still, should the benchmark for performance really be double your account in a month? No. But you're right that like a momentum strategy and its performance is a little bit different from what a day trader is doing. And like the whole thing with a day trader is that like you can catch these crazy moves. Like there are moves in the micro treasury yield futures that could have netted you $200 or more in a single day, right? That would have been your whole year right there. And not having to do anything crazy. So, anyways, on this strategy here, that I knew that this was a thing, but I didn't think that it really mattered. But seeing that makes me go, okay, yeah, we need to take a second look at this. So I'm going to go back to this one where we went to 2018. Okay, 10, 1, 56, 47. Yeah. Okay. And I'm going to come in and I'm going to do the high fill resolution with a, well, let's just say 10 seconds data series underneath. This should make it take a lot longer, but it will give us a little bit more accurate results. And let's see if that destroys the performance of the strategy. Because that might be the thing, because I've been suspicious of this the whole time, but I really didn't think that that would make that big of a difference. But seeing that one particular trade makes me go, oh, you know what? There actually is a lot of volatility at this time. So we kind of do have to account for that. This should take a long time, though. So in the meantime, what was going to be, well, we got so stuck up on, I think it's so funny, too, that we in the community enjoy talking about funded trader programs so much. There's nothing that seems to drive more engagement than talking about that. But what would I say is other thing holding traders, most thing holding traders back? Should it just be over leverage? An unreasonable expectation? I guess you could kind of put that under the category of over leverage, though, right? Yeah, there's a lot of wrong info, but I'm trying to go into, okay, like what are the 5 things that retail traders do or believe that is holding the most of them back, right? So like smart money concepts price action has become so popular that it is one of the top 2 things holding traders back, right? Oh geez, I ran it with 1 second on 3 months, but it was still messed up. Really? Well, all we're gonna do here is we're gonna say, okay, I'm doing it on 10 seconds because I think that's reasonable for 10 seconds over 10 years is kind of like takes a long time, right? We will see the difference. What is the difference in total net profit between this one and the other one, right? Like if backtesting it on 10-second bars takes the Sharpe ratio down to like 0.6 or below, then I know that it probably isn't actually a great strategy to trade and that we're just tricking the backtester. What, you like are you talking about the music, Captain Price? I decided to put something a little bit more chill. Hey, you know what? I should, so that the screen looks cool. Let's put the chart up here. So you don't have to see which video games I'm playing right now. Yeah. Actually, I don't think I play any of these. I think the only Kovacs and Unreal Tournament are the only ones that I've really been playing in the last month. Oh, and Helldivers, of course. No, oh look, oh, it finished. Holy shit. Yeah, that's not good. That's what it is, man. The granularity, 1 minute bars just is not granular enough during that time. And so it was selecting for a time that, I mean, it's still profitable, but like 23,000 over 10 years, that's like $3,000 a year. It's not really worth it. Yeah, so I was playing Minecraft pretty heavily for a little bit, and then I beat the game and kind of lost interest in it. I mean, I still there's still other content to go into, like go find an ocean monument and do the ocean monument, and what's the other one? I can't but I defeated the Ender Dragon. And after I defeated the Ender Dragon, the world was not as interesting to me for some reason. But part of it too was that I was trying to beat it for my kids, and it's just not the time to get everybody on a game and do something. So it didn't really. My start time is off on this one. Oh, well, I have it at 6 a.m. and I'm using a time offset of 473, which is what we're using before. Right? Like, here's this one. So right here, parameters, right? So for the one that did really well, or not that one, this one right here. This one, let's just remove this one. Okay. Parameters. Time offset 473. Start time 6 a.m. Yeah. All the parameters are the same. The only difference is the fill resolution. So it's kind of funny because it suggests that you could make that much, but the strategy itself doesn't actually make that much, right? Maybe somebody else doing something different at that time could have made that much. But it would have had to have been different. It would have had to have been like they sold the top of that bar every time. That's actually kind of a little bit weird that Ninja Trader does that. I think if I was my back tester and I was doing, you know, like here I entered in this bar. Okay, I entered at the start of this bar and then I got stopped out in this bar. I should not be able to enter again until the next bar. Right? So really my reverse entry should maybe be here. Or my reverse entry should be at the same price as the stop loss. In that instance, it looks like it would maybe actually still be just a little bit too... Let's see. Measure ruler. Y value 250. They change it to ticks. Yeah. See, in order for it to be a winning trade, it would have needed to hold it all the way to there. So maybe. But it depends on what happens inside of that bar then at that point, right? But that's where I'm saying if it was like, okay, you don't get in again until the next bar, now all of a sudden you get that. Okay, and it would have taken a profitable trade. So that's a pretty major limitation in the NinjaTrader backtester, right? Yeah, well, that's exactly what I'm saying, is that this fill right here, that fill right there is bullshit. The reason it's filling you right there is because that's the open of the bar, right? So you got stopped out down here, and then it allows you to go short on the open of the bar? No. Now, if I wasn't using the order methods, why is the take profit so close? Well, because the take profit, there's two R factors, right? There's the R factor and there's the R factor reverse. And the R factor reverse is only one. So on this trade, the risk reward is equal. Whereas on this trade, it will allow it to run as far as it can. Well, it will try and let it go 10. So this is where I remember there was one guy that him and his friends were really super serious, and they had a strategy that they thought worked that was kind of a really, really short-term price action based sort of a strategy. And he showed it to me. He was like, "What do you think?" And I was like, "Well, what you would want to do is go and run this, like run it every day, and then at the end of the day, go back and run it through the backtester. And are the trades that the backtester says it would have taken the same as the trades that it actually takes?" And then he came back and he said, "Well, no, they don't." Well, why is that? Well, because of all these things that I just showed you. So how do you deal with that? Well, okay, so we change the fill resolution to high, have a seconds bar underneath, and have it do it on 1 second or 10 seconds, right? Which takes forever, by the way. So it's like you're optimizing all of these values and stuff, but then they're going to optimize for a quirk in the backtester, so that then when you go in and you do it on the higher quality data, you know, the edge disappears. I don't know, it hitting 55% on those counter trades is still kind of impressive. But I digress. These are kind of the problems that you get, right? Like, you are more likely to find a quirk in your backtester than you are to find an actual edge. Right? No, but you can make the reverse run if you want, because you can just change the R factor reverse to 10. Or whatever you want, right? Because the way that it works is, I like to express it in these terms because it kind of gets into your mind, you know, what sort of win rate should I be getting, et cetera, right? So what it's saying is my stop is 56, and then the R factor is my take profit is the stop times my R factor, right? So if my R factor is 2, then I'm trying to get winners that are twice my losers. If my R factor is 0.5, which you can do, then your take profits is shorter than that. Do you want to try that? Let's try that. Let's set the R factor on the base one to be 1 and the R factor reverse to be 0.5 and run it and see what it does. That might actually work. I don't know if I'm going to say I'm going to bet you, but there's a pretty good chance that what I just did will make more money than this, but the Sharpe ratio will like go down big time. So, let's see here. I think that's good enough on that for now. Hold on a second. I want to make sure that yeah, let's just oh, actually, it was less. But do you see the Sharpe ratio goes down to 0.14? And why is that? Well, because look, now you have, you know, some of these reverse trades where, right, the ratio to average win to average loss is now basically 1, whereas before it was 1.5. Yeah. Oh, now that's interesting. How far does it actually let me go back? Not chart analysis. Cumulative net profit. It will only let me go back to 2023. So I can only get a year's worth of 1 minute data. Oof. Oof. So that's another bit. Okay, so that's interesting. So this one right here, that was 23,000, but it's not actually going back to 2018. Wait, let's switch back to that one. Yeah, it's only going back to 2023, April of 2023, because I'm only allowed to see a year's worth. Okay, so $20,000 in 1 year is not bad though. Now, maybe if I went one second data, it would be even worse. Let's see. Let's try the difference between 10 seconds and 1 second. Okay. There's a ninja site that sells all data. Well, 1 second data going all the way back to 10 years. I don't know if I'm really care enough to buy that right now though. Because at that point, I would rather just get data from Norgate and do it all in Python. To be honest. Well, the 1 second probably has fills that make more sense at the very least. I think part of the problem, though, is the way that our indicator is written. Where is the Ninja script editor? Because it's not all happening within on-bar update, right? If I had something that said, I just exited, and then I don't take the reverse until the next bar. So in other words, on order update, I would say I just got stopped out, and I would set a Boolean to say I just got stopped out. And then in here, I would say if that Boolean is set, then take the reversal trade, right? Then I probably wouldn't have as many problems with it. But these things down in here kind of happen on intraday, right? And when I come in and I say, okay, enter short, it says I'm going to enter short at the open of this bar, even though when this would be happening would be after the start of that bar, right? So basically, we found a way to cheat the backtester. I think Norgate is only end of day. I think you're correct. I don't think that they have intraday data. I don't know. To be honest with you guys, I'm not as interested in testing intraday strategies anymore. Except for my order flow ones. And I've been saving the data myself for that. Right? Let's see, is it done yet? Aha. Okay, so going from, wow, that's bad. Going from 10 seconds to 1 second took the total net profit to 17,820. You want to try that little change there in the strategy that I think might make it a little bit more accurate? I'm gonna say up here, private bool underscore reverse equals false. And then this stuff down here, I'm gonna cut. I'm gonna say underscore reverse equals true. And then in here, I'm going to say, I'm going to add these right here. Right. But I'm going to put it in this. I'm going to say if underscore reverse. Da, 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 da. Da, 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 da. Okay. Okay. Pile. Oh. Yeah, we don't need all this stuff. Oh, set stop loss. We'll just say open of 0. Okay. Did I get them all? I did. So now if I refresh this. Yes. Uh-huh. Okay, did not work. Did not take the reverse. Reverse equals true. Oh, and then down in here, And after I've done this, I have to say reverse equals false, right? I have to reset the variable. I don't know why that wouldn't, because wouldn't that just make it want to take the reverse all the time? Still no. Hold on, where's my output? Oh, that's weird. Oh, on starting a real-time strategy. Okay, blah, blah, blah. Is this ever even getting triggered? Does. You're right. Yes, there's lots of different places that you can get data from. Okay, so why isn't it taking my reverse entry then? Hmm? Do we run out? On the music side here? I am starting to study C#, but is it okay to study both Ninja script? So if your primary goal here is to do backtesting within Ninja script, I wouldn't really focus too much on C# as a whole. You will be able to learn everything that you need to know just from looking at other Ninja script code. Because the things that you're going to learn by focusing on C# is going to have a lot more to do with the quirks of C#, tricks and stuff that you don't really need. Oh, what the hell? Oh, you know what happened is that my wife is driving somebody to school and my phone connected to the car. I don't know where we were at in the playlist, but there we go. Aren't you trying to set stop loss or profit target for a price level already reached? So no. So what I'm trying to do, I can see where I made my mistake, by the way. Okay. So that means, by the way, that this is wrong too. What I'm trying to do is I'm saying when I get stopped out, I'm setting a Boolean that will that will force me to take the reverse trade at the start of the next bar, because it's trying to take the stop trade, or the backtester is trying to take the stop trade within that very bar, which doesn't make any sense for the backtest, at least. Okay, so now when we do that, oh, and well, I can get rid of the things later. Aha. Okay, so now now it did it. Now it says, well, now hold on. So that should be long. And then so let's change some of this. My reverse entry short. My entry long. My reverse entry long. That way I can tell more easily looking at the chart what it's doing. And I'm going to have to come down into here and also say if order name equals my entry long, or order dot name equals my entry short, right? Long. Okay, so these ones are long, short, long, short. Dum-ba-dum-ba-dum-ba-dum-ba-dum. Okay. Yes, it says my entry short, but why is the short there? My stop. Wait. Am I doing this? Am I actually doing this right? If buy side, enter short, my reverse entry short, set stop loss, set profit target, price, open, minus. What? That makes 0 sense. Well, yeah, so the entry, well, let's see here. What is it actually saying? Okay. So the entry is at 18,572. 18,572. The profit target should be 18,570 or maybe 569 or something like that, right? But it's saying that the profit target was 15,575. So it's a short that's taking a profit when it's down? What? That doesn't make any sense at all. Open, set stop loss. Open plus the stop. Yes. Open minus the stop. Yes. How is that? I don't understand at all. How is that? That's not right. My code is correct. Or at least I think my code is correct. I can get rid of these. How's your short stop named? I don't see that the stop on long trades is my stop. Oh, it should be called my reverse entry. Yeah. So let's see here on this method, set stop loss. From entry signal, calculation mode, blah, 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 blah. And there's also one that is just calculation mode and a double. Okay, so we definitely want this one. Now, I could change the calculation mode. I could say calculation mode dot ticks. And it'd be like that. But I'm not sure. I think there's something where that doesn't work correctly. I don't think that this will actually work correctly. It's like if you don't specify them with price, they don't. When you're trying to set, you know, the stop and target on a per trade basis, it doesn't work correctly. I've always had issues with that. It's like a little quirk in NinjaTrader or something. There you go. Okay, now that is correct. I get in at 72 and I hit the stop loss. Okay, maybe I was wrong. Let's look at this one because it looks like this one was the opposite. Yeah. Okay. So we go long, we get stopped out, next bar, we enter in short, and okay, so this is the one that pisses me off. You've got to, okay, when I tell you that the back testers aren't incredibly accurate, okay? In this trade, so it gets in at the open of that bar, right? Both my stop and my target are within the range of that bar. So what does it do? It assumes that I got filled on my target. It assumes that my target gets hit before my stop. Shouldn't it do the opposite? Shouldn't it assume the worst, that you get stopped out before your target? Like, that's so effing stupid. I just, that's the thing I hate the most about the NinjaTrader backtester. And I think they do that so that people will go and, you know, oh, my strategy is awesome. You don't care. Let's rerun this. Let's rerun this one. See how that changes the overall results. Not bad. Not bad. So that change that I just made there eliminated most of the problem trades. But it looks like there's still, you know, because there's a difference between that and the one, well, except for that this allows me to go over several years. So maybe that one is fairly accurate. Because if we go back to 2023, actually, let's just change it. Let's just say 2023 and going to April 1st, and we run that. That should be around $3,000. You missed the entry criteria? Sure, I'll show you. Since we no longer are like, oh, this is a profitable strategy, we don't want to tell everybody. So what it's doing is, okay, there's a couple. Yeah, how deep do you want me to go? You just want me to describe, or do you want me to describe the actual, like, every line here? Wait, did it finish? Nope, it's still running. Move that over there a little bit. Okay, so here's the first thing is I kind of want out of this. Yeah, let's do this one. No. I'll just do that. What? It doesn't, oh, it saves it in my OneDrive, really? Okay. Ha. Okay. I have all the time. Okay. Did it finish? It did finish. Oh, it says that it made 13,000. Oh, am I still doing the order fill resolution high? Oh. Wait a second. So go back to this one. Standard. How much does this make over the 10-year period? 80,000? Okay. Well, it's still better than most strategies, but interestingly enough, after all of that, the reversal trade is not profitable. How did you learn to code? Mostly from school, I would say. So the way this started was I was always a computer guy. I always wanted to like make video games or something. But I was not able to really get into like serious programming until I was in high school with my calculator. So I would program stuff on a TI-86 or a TI-85, right? And, you know, I did that for a while and I got pretty good at that. And then when I got to university, I really learned real programming, right? And at my university, C# was kind of like the language of choice for a lot of the courses. So I learned a lot from C#, and then I ended up at 2 C# shops, I guess you could call them, right? Both of the companies I worked for, C# was the primary. Well, there was Goldman, and then 2 C# shops. So that's where I learned. Okay, I will walk you through what's going on here, okay? And I'm going to pretend that you don't know anything about NinjaTrader programming, okay? So the first thing is, at the very top, you're going to have these declarations. These are, usually you don't have to change these, but these are telling you, these are the libraries that you have to load to be able to run this code, right? There's a namespace, which again, you don't have to worry about. It should just be NinjaScript strategies. Okay, and then here is our actual class. So we have a strategy. So it's called time, stop, and reverse. And it is a child of strategy. Okay? We're extending the strategy class. Okay. Then in C#, if you want to override, so the parent class will have a method called onStateChange, right? We want to replace that with our own onStateChange. So in order to tell it that that's what we're doing, we have to use the override keyword. This right here, override, okay? Just above that, these are like variables that are accessible everywhere within the class. I should have them with like underscores. That's just like a naming convention. It doesn't matter. Like the compiler doesn't force you to do that, but best practice is to put an underscore underneath of it so that people understand that it's a class level variable, private variable. Okay. Anyways, so then we get in here to onStateChange. There is a class level variable defined in the strategy side or level called state. And when I come in here to onStateChange, so this gets called every time that the state of, so like when you first load it up, when it's done loading the data, when it actually starts running the strategy, these are all state changes, right? So the first one is set defaults. So when that happens, we set all of these variables. Everything above here is like that's in every NinjaTrader strategy, right? Like everything needs to have a description. Everything has to have a name. Calculate on bar close. Let's make this a little bit wider so we can make it as wide as we can make it here without it looking weird for you guys. Okay, there we go. And then here's the defaults that I set for my variables. There's stop, R factor, reverse, by side, and then there is a date. And I look at the current date to figure out what the default date that's going to put in there for, right? You always comment your code. I only put comments in my code if there's like a reason why I would think that somebody else coming through and read it would not understand why I did what I did. So like if there was a bug and I come back and I changed that, I might put a comment in there because I don't want them to change it. But preferably, they should understand what I'm doing from reading my code. Like, I want my code to be, easy to read so that I don't have to do funky stuff like that. I don't have to put comments all over the place. These comments are put in by NinjaTrader. Yeah. Okay. So there's also this state.configure. That's kind of like when after the defaults have been loaded and it's doing things like loading the data and stuff like that, right? There's also a data loaded. So I do a lot of stuff after and before data loaded, but not in this case. Okay. So then the next major method that you want to know about is on bar update. This is where at the end of every bar or at the beginning of every, it depends on what your calculation mode is, but at the beginning of the bar, this calls. The end of the bar and the beginning of the bar, they're the same thing, right? This is depending on if it's the previous bar or that part, but I digress. Okay. And what I'm doing here, this first little bit is I have to know what, so the strategy is we go long at a specified time of day. Like every day at 1:58 my time, we enter into a long. That's the strategy, okay? So to do that, we have to, and I have that start time variable, right? So that start time defines when it's going to happen. So I have to determine what is that exact minute for today, right? So that's when I come in and I say, okay, so we have to find what the current bar is. And then we have to look at, I added an offset in here. This is just so that it's like, it's the start time plus a number of minutes so that we can optimize on that, because if it's an offset, that's an integer and we can optimize on that, right? So I'm doing my time offset divided by 60. That will tell me how many hours of offset I'm doing. And then the remainder is how many minutes of offset I'm doing, right? And then I create today's start time, current year, month, and day. But then my start hour plus the offset hours, start minute plus the offset minutes, and then seconds should just always be 0 anyways. Okay. Then I say time of 0 is, again, it's a variable that's accessible from the class level time. So, and 0, that is the current bar. Okay. Last, a bar, like the previous bar will be 1, and the bar before that will be 2, etc., etc. Okay. So the higher the number, further back in time it goes. Okay. So if the current time is the start time, then I enter long. Okay. And I have a little variable here to switch it around. I say if it's a buy side, then I enter long, and if it's not, then I enter the short. Okay. Now this part, ignore this part for a second. This whole thing, just ignore that for a second. Now this is where it gets kind of complicated, because these are methods that we don't typically talk about, but here's one that is on order update. So this is every time that an order is updated, it does something. And the reason it's doing this is because, like, what if you want to trade multiple contracts and you get multiple fills at different prices or something like that, right? So it's trying to deal with that. But it's basically, it's looking and it's saying, okay, if I've done my entry long, like I'm already in a position, right? Okay, then I just want to update some of these variables and stuff so that, like, entry order equals order. This was one of those variables up at the very top, right? So once I get filled, I want to keep track of that order, essentially. Okay. Then we have this on execution update part, right? And what this does is, okay, if I get filled, then I want to set my stop and target based on where I got filled. Okay. This is the buy side one, and this is the sell side one. This is the same thing. It's just a slightly different situation. This one is like if you were partially filled, and this one is if you're completely filled. Okay. And then this one is, let's see here. Oh yeah, after I'm completely filled, then I reset those variables. It doesn't matter. Okay, then there's this one, which is, okay, if I'm getting stopped out of a position, if I get stopped out of a position, not only do I have to reset all of those variables back to null, but I set reverse equals to true. Okay, so I just got stopped out, reverse is equal to true, which means next time that on bar update executes, right, it's going to come down in here. It's going to see, okay, we're past today's time, so I'm not going to do anything here. But, oh, if reverse is true. So now I'm going to come in and do this. I'm going to say we're buy side. I'm going to enter a short. I set my stop and target. And we're good. And then at the very end of this, I set reverse back to false. Okay. So all of that's the explaining all of the code. So you understand all of the code that's in there. But essentially what it's doing is it's taking a long at a certain time. And then if that long stops out, it tries the reverse trade. Okay. The thing that I had just changed was that we had found that these on order updates, right? These will execute within the bar. So what was happening was we were getting stopped out of the trade. And then I was taking, the entry in this on execution update part. And so in that very same bar that it stopped out on, it's trying to take another entry. And the backtester says, okay, so I took an entry, then I will get the open of that bar. But at the point at which it's entering that order, it's not the open of that bar anymore. So what we have to do instead, in order to have more accurate results, is we have to say, I can't get in until the start of the next bar. Which is why we just set a variable and we let it happen in the on-bar update. So I should have known better, but generally speaking, if you have like enter long, enter short outside of on-bar update, that can potentially give you unrealistic backtest results. You might want to do it because you might want your actual strategy running to do those sorts of things, right? But it messes the backtester up. Line 91 should be short. Let's see. Oh, you're right. My entry short. Would that change the result of the strategy though? I don't think it should, but we'll just try it. Oh, it won't happen because that piece of code wouldn't have been executed anyways unless we were doing the not by side. But good catch, Vio. You're actually reading the code. I usually miss those sorts of things. It's within this, you know, it's the short side of it. So yeah, if we were doing the short side of it, that would have affected things for sure. I tell you what, I've only been using this text editor for about 2 or 3 weeks now, and I'm already to like, I can't stand it if I'm not using this. Just so much easier for me to move around and, you know, go to the beginning. I should be doing things like when I was coming in here and doing this, I should have said jump list. I should have done Control S here. And then when I was down here, okay, here's where I set my targets. Control S. And then down in here is where I set the reverse. Right now I can jump between them. There's on bar update. There's the stops. There's the reverse. Once you start using the jump list, now then you just kind of like instinctually you click it until you see the piece of code that you want to see. Okay, there we go. Cool. Where do we add a contract for the short? It should short 2. Yeah, you want to switch that back? Let's fix that. Let's create a new Ninja script property. Public int reverse size. Get set. We go back up to the top here. Reverse size default to. And then if reverse, enter short, reverse size. And that should be all we need. And we come back over here. I should see, oops, sorry, not here. Here, I should see it compiling. Okay. So if you want to see that with the reverse size, we'll see. But it probably actually increased the losses. Yeah, it did. Because with the way that we did it, the reverses aren't working as well now. So why aren't you using the Visual Studio? You mean like opening up open the project in Visual Studio? I only open up Visual Studio for debugging. The Visual Studio debugger is the best. Nothing comes even close to the Visual Studio debugger. But when it comes to editing text, I like to use Helix. VS or VS Code? Well, I use both, but I don't use VS Code as much anymore, to be honest. You got to understand where that came from. Okay, so you got Visual Studio. Visual Studio was really originally created for people to write C++ code. So that like the people writing Windows and Windows utilities, because that's all written in C++, you know, so that they could actually debug and do things correctly, right? Then they made C#, and so they built everything in C# to revolve around Visual Studio. Okay, so if you're going to program C#, you're probably going to use Visual Studio. Now, for NinjaScript, it's a little bit more simple. The situations where you really want to debug and come down through it like, you know, line by line, we usually don't have to do that. And so that doesn't really make sense. But it does have the ability for you to open a project in Visual Studio. But they just wanted an editor that gave you most of the Visual Studio kind of like features, like the, you know, when I come in here to date time, what are the parameters here? It tells me, like the IntelliSense, right? Okay. So it has the IntelliSense and the features that you really need. And it's a kind of like a stripped down version. Cool. Okay. Then the world changed. and when Web 2.0 came along, web development and like programming in web development had become so common that, you know, there was just a bazillion JavaScript developers out there now. And yeah, you might still be doing your backend in C#.net, but opening up JavaScript in Visual Studio is stupid. Doesn't make any, you know, it just doesn't work very well, right? And the people that are doing like JavaScript stuff, because debugging and all of that's not the same, they're primarily concerned about how quickly does the editor open, etc., right? And so that is why Microsoft then went back and created Visual Studio Code. And they made Visual Studio Code extensible with JavaScript. They made it in JavaScript, but they made it very, very efficient. And they made it extensible. And so then what happened is everybody created a bazillion plugins to put into Visual Studio Code, right? So if I'm going to write JavaScript, TypeScript, whatever, probably I'm going to use Visual Studio Code, right? But then something else is happening right now. And that is, in Visual Studio Code, there were a lot of plugins that were like, oh, you can use Vim key bindings. So what is Vim? Vim is a modal text editor. What I'm using is not Vim, but it does the same thing, essentially, where there's different modes. So when I'm in normal mode and I type J, it moves my cursor up and down. You can see, right? Then when I get to where I want to edit things, I type I, and now when I type J, it actually puts the letter in, right? Okay. So this allows me to, like, you know, because a lot of the time I want to go up a line, I have to move my hand over to the arrow keys. Right? With Vim and a modal text editor, I don't have to do that. So people created those plugins for Visual Studio Code, and that became so popular that other people started to go, well, hold on, wait a second. Wouldn't it just be better for us to go back to like Vim? And so then they made these other text editors like NeoVim and Helix. NeoVim is basically like it's Vim, but with plugins, and you add all of the right plugins, and NeoVim works basically just like Visual Studio Code does, right? But you have better integration with all of the Vim key bindings and so forth, right? And then Helix kind of said, okay, that's really cool, but there are some things about the way that Vim works that are a little bit antiquated. It's really hard for people to understand what's going on. So we're going to redesign it from the ground up to have key bindings that make a little bit more sense. So like in Vim, you can come in and you can say, I want to delete this word. So I say, I'm going to, C is change. I'm going to change the next word. So you do CW, right? But after you click the W, then it, changes it. But you don't actually know what you're going to change before you click that W. So Helix said, actually, doesn't it make more sense to select it first? So I do W and then C instead, right? And then they also said, oh, let's like have everything be like Spacing Max. So like I press the space bar and then it has this thing. Oh, here's a file picker. So now I can go to the file picker and now I can say, okay, we don't know how an SMA works. Oh, there it is right there. Pull it up. Cool. Now I'm already in it. Space buffer can go back to the previous file. Now I can switch between files super hyper fast, right? That's why I really like this text editor. So I'm using Helix, not Visual Studio Code. But on my work machine, I have Visual Studio Code as well. So there's still some things, like especially if I want to I'm having trouble matching up curly braces and that sort of a thing, I might open up Visual Studio Code. Be a good answer for why it's so popular for web development. Yeah. Well, so that I just gave you the history of text editors is kind of an interesting thing. It's kind of an interesting thing because when you really think about it, what is programming at its most basic skill, right? At its most basic skill, it's all some form of editing text. It's really all down to editing text. So if you want to program, I would highly, highly recommend, getting into Vim. So Helix and NeoVim, you can install them on Windows. They run in the terminal still, but you can install them on Windows and use them. And practice editing text with Vim key bindings. Because I think you might find, maybe just memorize the keys. Literally create a text file with the keys that you think that you're supposed to be using the most. And then every day go in and test yourself on them. This key does this key does this, memorize them, and then come in and edit text and actually use it. And as you do that, you will just build muscle memory, right? And then all of a sudden you get to this point where you're just editing text and you're not even thinking about it. And you get into the flow state. So once you're in the flow state with text editing, it's just, it's freaking amazing, man. And you just plow through code. And you love it because that's the key thing. It's if you're a woodworker, right? What is your key? I know there's a lot of different things, but I think one of them would be, planing the wood. Or if you're a carver, doing this, right? And that's a kind of a skill, and you're doing that over and over and over again, right? That's the equivalent for a programmer, is the text editing. And you're going to be doing that. You're going to be a programmer, you're going to be doing that every day for the rest of your life. And your body learns to do that thing, and your body enjoys doing that thing. It releases serotonin to do that. So learn to love text editing. It makes a huge difference. Why are market forecasts less than 50% right in predictive power? Well, so first of all, when you're coming into market forecasts, that's a pretty big space, right? I could say, where is the market going to go in the next 5 minutes versus the next week or the next month or whatever the deal is, right? The market is not random, but what we say is it's a martingale, which means that the best prediction for the future price is the current price. And that's the best prediction, and it's not really even a very good prediction, right? What it really is it's a chaotic system. So every order that comes in affects the price. even your little one lot has some effect. There is, if we had time machines, there are some situations where we could go in and we could find a situation where you taking a trade or not taking a trade affected how that instrument moved. We would be able to do that. Okay. Every order has some impact. Not only that, but the impact of one order is actually like huge. It's actually huge. So they've done these things where they say, if you take $1 out of bonds and you put it into stocks, how much does it change the total market cap of the stock market? You'd think it should be $1, right? Because you put $1 into the stock market, but it's actually like $5 to $8. Okay. So like orders have huge impact. So you have all of these orders coming in all the time, and each one of those orders has a really strong impact on the price. Then you have a chaotic system where the price is going to move a lot and is going to be very difficult to predict. It's not random, because random would mean that there's like no rhyme or meaning to it, right? It is actually, you can calculate exactly what price is going to do if you know all of the orders that are placed into it, right? Because what happens at the exchange is a system that it comes out with the same answer every time based on the orders that are placed into it, right? Problem is, we don't know what the orders are going to be. There are some situations where we can predict future orders. So this past week was a really good example. You have quarter end, and there are a lot of funds out there that have to rebalance at the end of the quarter, right? Like if their stocks have done really well, they have to sell off some of their stocks and reallocate some of that capital to bonds in order to keep their portfolio 60-40, for instance, right? So we can predict that they're going to do that, and that flow is going to come in here, and then predict that price is going to move up or price is going to move down. Okay. So with having like predictors of order flow, we can actually make very accurate forecasts. And as far as we understand or believe, that's what a lot of the big hedge funds out there are doing, is they're finding these kinds of predictive signals and front running those flows that they know come in regularly. That's why these firms, they spend so much money on data, because they don't just want, what happened on the exchange. They want to know who was buying and selling so that they can kind of split it out and say, this hedge fund, they buy at the end of every quarter, and that's this much money, right? But when you look at like the forecasts that people try to make, well, so probably the most popular model right now is like Garch, right? Which is trying to use the past volatility and all of these things to try and predict what's going to happen, right? There's going to be limited predictive value in that, but part of that is because you're trying to predict like every day, right? Whereas with flows, we're making very highly selective. Here are some instances where I can predict where it's going to go, right? Another issue is that a lot of price forecasts and stuff are just based on like fundamentals and so forth, right? They say, okay, this stock is worth this much, and that's like undervalued, and so over time it should go back towards its fundamental value, and so it will go up, and so people make price forecasts like that. But guess what? The fundamental value of a stock is not what determines the stock moving. What determines the stock moving is people buying and selling it. So if people are going to come in and buy it, even though it's not worth that much, it's going to go up, and it could do that indefinitely until people start selling it, essentially, right? I believe that herd mentality is the best strategy in trading when it comes to order flow. Don't ever stuff in front of volume. Well, kind of, sort of. So I actually am not a huge fan of like the sheep like in Jigsaw, they call it the cumulative sheep index, for instance. Because there's this whole thing that's like, there's kind of this assumption that all of that's coming because all of a sudden everybody all at once has decided that they want to buy it or sell it, right? And that's usually not what's actually happening. What's usually happening is there's a really big guy out there that has to buy or sell for a reason. And it may have something to do with the news that's going on there. It might have something to do with it reaching a key price. It may just be completely random, but he needs to buy and sell, right? Everybody else is kind of trying to predict what he's going to do, right? And so there might be some situations where we pick up on that that's what's happening, that this guy has to buy a ton of it. And when that happens, that big guy kind of has to panic, right? Everybody's buying, and so he has to just grab what he can because everybody's going to move it up before him, right? And that's when you get those kinds of rushes and stuff, right? And then on top of that, you get people stopping out of positions and things like that, right? So what I want to do is I want to know that that big guy is out there, and I want to get in front of it. So what we did on Wednesday was a super great example of that. We knew that they were going to buy. I had to sit in it for like 90 minutes before it happened, but eventually they did buy, and there was quite a spectacular breakout to the upside. And that breakout happened as everybody kind of realized, oh, there is a big guy out there. He does have to buy. Yeah, there was a big seller, but these people that have to buy are way bigger, right? And it all whoosh, you know? So it's not like the cumulative sheep index is wrong. It's just I don't think that it's as effective of an explanation of like what's going on to really help you as it is like understanding that there are these large meta orders and you're trying to predict those, right? But then that does mean that, like Andre says, when you're seeing a flow and that flow is getting aggressive, you don't want to stand in front of it because the chances are that there's still more to it, right? So there's strong autocorrelation in the sign of orders. If they're buy, then your next hour, you're more likely to see it still be buying. Like those flows tend to go all day, but like the biggest ones, they will go all day, if not for weeks. You don't have to know. You mean the theory of reflexivity is part of it? So, reflexivity is an interesting thing, but I think is kind of a slightly different sort of a situation, right? So what we've just established is that orders have strong impact, and here are some of the consequences of that. These are some of the behaviors that you get because orders have such large impact. One of them is that if you are a large firm and you need to buy a lot of something, you can't just do it all at once. There's not enough liquidity out there, and you will move the instrument too much. And so they have to split it out over time. And as they split it out over time, that will result in these kinds of trends, right? Now, reflexivity is something a little bit different, but it is taking advantage of that strong impact of orders, right? Because what reflexivity does is it comes in and it says, okay, I know that if I buy a ton of this thing, it's going to move it up. But I also know that if I move it up, that will trigger these other people to turn around and do this thing. And they will buy it, and that will also move it up. And that will trigger other people to buy it, and that will also move it up. Now, that sort of a situation where like buying triggers other people and triggers other people, beyond just like a stop run, that's not necessarily a very good like setup sort of a thing. But what is a very good setup is like if I come in and I sell this currency, and then that weakens people's trust in that currency. And so they also start to sell because they can see that that currency is getting weak. And then though that's where you get the kind of trades that George Soros does, where he wants to come in and use his impact to his advantage to try and create secondary effects. And where he does that, where that ends up being really effective, is where those kinds of secondary effects have macroeconomic impacts, right? So when we're talking about reflexivity, you kind of have to come back out to like a little bit of a higher picture, right? Especially with currencies, because he did it with currencies, right? That's what reflexivity is about. John Philippe has a nice papers about latent liquidity and the effect of meta orders on the markets. Yeah. Yeah. I tell you what, man, his book is super great. The thing that's cool about Jean Philippe is that, okay, so he's done some research that's really important. Like the research about a Walrasian auction and converting it into like a continuous auction. And from that, you can see the square root law emerge. Super important paper because that explains to us why the square root law occurs. It also explains to us a behavior that we see in the markets that we can really use to our advantage to avoid getting stuck in a range, right? Because we can see when the liquidity hole is forming and that we don't want to trade it. But Jean Philippe's like contributions have actually been more on the time series side with momentum strategies. Like he did all of this work to, you have a correlation matrix, and how do you sort out some of the correlations between the correlations in the correlation matrix to really give yourself a portfolio that is like highly uncorrelated, for instance, right? Like he did all of that stuff on top of it. And all of this market microstructure research has basically been Jean Philippe going like, well, it doesn't make sense that we can make money from momentum strategies, so what's with that? And then they kept digging until they understood why in the market microstructure momentum strategies work. Because people thought, oh, momentum, it's because you buy it and then somebody else buys it. But actually, it has more to do with that there's these big guys and they have to buy so much and they can't do it all at once, and so they just have to keep buying over and over time. And then especially in commodities, you know, whatever it is that's causing them to have to buy will continue in that direction. You know, like if there's a supply shortage, so that supply shortage happens for a long time, and so it trends up for a long time. And based on their research, you know, when they say we're going to model the market and this is how we're going to do it, when they use those, that fits the market that we see better than these all explanations that technical analysis has come up with, that like, oh, other people see other people buying, so that's why they want to buy. That you model that doesn't look like the market at all. So Jean Philippe really is like, you really want to understand the market and why it is what it is, you want to read Jean Philippe's book, where he compiles basically 20, 30 years worth of market microstructure research. And for some reason, retail traders don't even know who he is. He's not a famous guy. He was only recently with his paper where they used a what do they call this? An agent-based machine learning model, where it creates a bunch of little agents and then sees how those agents interacts with each other to determine how things play out, right? He used that to model inflation and show how inflation turned out. You know, pretty good study. It was not until that study that he was actually published in a major financial journal, which is kind of crazy, but I took one guy's comment and like really ran with that for like 30 minutes, didn't I? What was his books for derivative? I don't know if Jean Philippe has written anything specifically for derivatives trading. So if I'm going to do derivatives trading, then I want to read Nassim Taleb probably, right? Because the reason why I would want to read Nassim Taleb is because Taleb does a good job of explaining first all of the math and quant work that kind of got us to where we are today, but he also shows the statistical flaws in that work. Because there are statistical flaws in that some of the tools that we're using to kind of model these things do not do well with the statistical distributions that have fat tails. So then he kind of shows you different tools that are a little bit more effective at that. And I'm not exactly sure how I would apply those things to futures. Well, but he, in many places in Nassim Taleb's content, tells you, like, straight up, like, you want to model treasuries, or sorry, you want to model options. Don't use, sorry, what is the model that we, Black-Scholes. Don't use Black-Scholes. Use this. This is simpler, it's faster, and it's more accurate. Right? It's kind of different worlds, right? Because there's one world that is options. And options has a lot to do with the statistics, right? Then there's one world that is momentum. And momentum is kind of the world that retail traders are trying to copy, but they don't understand what momentum actually was, and so they're misapplying it, right? Like when we're coming in here and doing backtesting, part of what I'm trying to show you in the backtesting is that, like, okay, there's problems in the backtester that you have to be aware of, and then if you're able to deal with all of those and find a strategy that's actually profitable, I'm going to be like super stunned, because that usually doesn't work. But if you apply it to, like, trading a portfolio of assets on time frames of weeks and months, then it's a different story. And then this sort of stuff that we're doing, you can take everything that you learn, you can take it over into Python and using a little bit different data, and you can do momentum strategies. And that's where a lot of these funds, especially in futures, come from, right? So that's the momentum world, right? Then there is the high frequency trading world, which is also a little bit more like what we're interested in. Order flow tells you a lot about why things work the way that they do in the high frequency trading world. Problem with that one is you have to be fast. I want to get into that. I think that I could find some edges in there, and I have some things that kind of suggest that I'm on the precipice of an edge, but it needs some machine learning and some more complicated things that I haven't put into practice yet. Okay. High frequency trading world, right? Then there is like the valuation world, which would be like looking at all of the different metrics that we have about a company and trying to base my portfolio off of that. Right. And then an extension of that would be like the, what do we call this? Alternative data world, where people try and utilize unconventional data sets to kind of detect fundamental changes in an asset or whatever and trade it, right? So those are worlds that I know of in like the algorithmic trading world that are all like very vastly different. Once you study those worlds and you kind of understand them, you take a step back and you look at what retail traders are trying to do. And it's just like so silly. It's like what you're doing is so wrong. It's difficult to even like try and point out where or why this is such a bad idea. And like, it's better for me to just start with a clean slate, right? Like I'd rather teach people that don't know anything, because it's easier to teach them the right stuff from the beginning than it is to like undo all of the programming that retail trading has done. Valuations, I don't know, man. So let me tell you something. When I worked for the big bank, one of the systems that we had, this was not a system that I worked on, but it was a system that I interacted with a little bit, was this thing that basically it's like an object database. So like a normal database, you know, you're going to have these columns and you have records, right? And you might have another one and you combine them together, right? But what if you want to model relationships where it's like, okay, here's the treasury and there's a yield, and the yield that you're getting on that treasury affects all of these different assets, right? And then these assets are owned by certain companies. And so that changes the valuation of that company, right? But then there could also be these second order effects, like both of these companies own this asset, but then this company also owns this company. How do you model that, right? So it's a different type of data set. And so they created a database, essentially, that was an object database that modeled these sorts of things. And they had done some work. I think that this may be public out there. I don't know. And I don't know what the algorithm was, but they found a way to model these kinds of circular relationships too, where they can go and they do it a certain number of times. And then if the change is less than a certain amount, then they stop there and they say, okay, now we've completed that, or whatever it is, right? There's all these rules about it, right? And so what they would do then is they would use all of this complicated information to output to you, this is what IBM is worth right now, right? Based on all of the assets that they hold and all of the cash flows that they have and all of the changes that we can see in our system with the data that we have, right? This is why trying to market make versus specialists in the individual stocks is so picking hard, and not very many people do it anymore. Not until like Robinhood came along and you could do it with zero commissions did people really try and play with those, because these guys had such an informational advantage in terms of what a stock was actually worth at that point that it was very difficult to compete. And the thing that I'm getting at there, and to respond to the comment about like that the valuation is simple, is that this system is not simple, right? And it gives me a very complex model about what this individual asset is worth. And they're doing that for like every asset out there, right? So valuations can be simple, like doing a discounted cash flow is a relatively simple thing. But then you can like apply it differently to every stock out there. And there's all of this other information that might be unique to that stock that you could factor in. And so valuations can become the most complex thing you can do in finance. It is hard to give up on day trading, even if I had 0% success with it. Oh, dude. Whoa. This is a tough topic to discuss, because like, okay, I think that for you to even stand a chance at day trading, you kind of have to not care whether or not you can make money from it, right? Like, you have to love it for the love of doing it. And it would have to be something that you would still want to do, even if you knew that you were never going to make any money from it, right? You have to love the process. You have to enjoy the bit of doing. And I try and keep things process focused, because you won't always see the success right away, right? It's all about following the process consistently over years, and then by doing that over years, then you can see the result, right? How are you going to continue doing that process when you're not getting any positive feedback from the market? You have to actually enjoy it. It was just like when I was talking about if you're a programmer, learn to love text editing. Get into something like Vim or Helix or whatever, even if you're not regularly using it. But it would be better if you regularly use it. Like, learn to love your editor and learning all of the quirks about it, because that is at its most basic level, the little thing that you're doing every day. And if you don't enjoy doing that, how are you going to keep doing it day after day? Well, it's the same thing with trading, except for that for us, it's like, I have to come in every day and I have to, enjoy reading all of the news, know all of the news, and then looking through it of, okay, what are some possible flows that can come in? I have to enjoy watching the DOM and watching what is happening in there, and putting that whole process together. And the honest truth is that a lot of that stuff is not interesting to most people. I find it very interesting, but most people don't find numbers interesting. Most people don't find business financial news interesting, right? Most people don't find that a stock market, the impact of large meta orders tends to follow a square root law, right? Most people don't, wouldn't even know how to even begin to process that statement, let alone, find that to be an endlessly fascinating subject, right? So most people are just not cut out to do it. But coming in and putting money at risk and then making money from that situation, everybody loves that. Everybody loves that. And so the question that you have to ask yourself is, am I addicted to trading because of the past success that I've had, or because of the sort of gambling nature of it? Or do I just genuinely love trading? And I don't know how to sort that out for people. All I know is that I continue to love doing this after years and years and years, even when I'm not putting any money at risk. And so in fact, I kind of hate putting the money at risk. So I don't think that that's affecting me. Helix, a postmodern, yes. Because Vim was a modern text editor. So that's why Helix is a postmodern text editor. And I'm sure that at some point we might even get a postmodern text editor. Well, so going back to the text editor thing, one of the things is that in Helix, I can come in here, can do space, window menu, new window, new split scratch buffer, vertical. Okay, and now I have a completely new window where I can open something up, right? So that is not something that Vim originally could do, but that was something that Emacs could do, right? And then people built all of these things here I'm using Windows Terminal to run it in. So that's why I have multiple tabs, right? I can come in here and create another tab that's just on the command line, but I can also come in and I can split tab. I can go Alt Shift minus, I think it is. And it will open up a new horizontal one, right? And so that's built into terminal. On Linux, you use things like tmux to split your terminal out and switch between different terminals and stuff, right? So kind of what a postmodern text editor was implementing all of those features in the text editor itself. Kind of like Emacs did, except for that it was an actual text editor. Emacs is not a text editor. So that's why it's a postmodern. But I kind of wonder if at some point in the future you really have something that is really like a system that is really truly unified between your text editor, your compiler, your debugger, your source control change, your management of the actual production environment, and reading the metrics and the logs that come through that, where you can do all of that stuff with the text, and it's all highly integrated. That would be, to me, that would be a postmodern editor. And I do kind of suspect that it could be happening. But first, people have to finish figuring out cloud. Cloud and monitoring. And once those kind of solutions have kind of solidified themselves, then maybe people will start to work on making the workflow more efficient. Why is Emacs not an editor? Oh, man. Okay, so like what Emacs actually is it's a buffer manager. So when I come in here and I open up a new split pane with a blank document, it considers that a buffer. You know, and a buffer might not be saved on the system yet, right? You can save a buffer to the file system, but the buffer is just a spot there in memory where you're putting text in, right? So Emacs was really all about modifying and doing things with buffers. And you could do all of this funky stuff where like I put code into a buffer and then that code will affect the way that some other buffer is actually behaving, right? And then I can actually program functionality into the buffer to actually do stuff like maybe make a to-do list, and then I can go up and down through the to-do list and push spacebar and check off that piece on the to-do list, right? Those are the sorts of things that you could do in Emacs. So Emacs includes an editor, and you can replace the editor portion of it. For instance, one of the things that you'll hear them joke about is evil mode, because evil mode is basically Emacs with Vim key bindings set on the text editor, right? But what happened was, people moved to the desktop, right, and GUIs, and so it was either you were doing the GUI or you were doing the command line. And so Emacs didn't make as much sense because people were managing all of those things with the GUI instead, right? And so that's where I think it kind of turned into, okay, but the stuff in Emacs was really super useful for editing multiple files and having like a full development environment. So why don't we just build all of that into the text editor itself, right? Because Emacs is still around, like they're still regularly releasing code and stuff, but as far as I can tell, it's just not nearly as popular. Like the argument when I was a kid was always like, what's better, Emacs or Vim? And it was always a joke because like they're not actually even the same thing. Like they kind of compete. Like you'll either be a Vim user or an Emacs user, but they kind of fill different roles too. That's why it was a joke, right? But now Vim won. Right, like the number of people that know Vim key bindings is like a lot of people, but Emacs is the kind of this niche thing. But there's some cool stuff like so if I come back here and close these, actually I'll just move over to this. So like this file that I have right here is Markdown. So you might have seen Markdown before. Like if you've ever gone to GitHub and there's a README file. The README file is written in Markdown. It's a .md file. And this just allows me to like format things very quickly using only the keyboard, right? Because again, if I'm in Word and I want to make a headline, I have to select the text and then come up here and go to a drop down or press the bold button or I or something like that, right? But with Markdown, you just signify that it is a headline with, you know, the number of hashes in front of it. 1 is headline 1, 2 is headline 2, etc. etc. Right? And then each one of these next lines is an item in a list, and I can make a little checkbox for it, right? That was kind of a thing that people did in Emacs a lot, because they would have all of this, they would make all of these lists and stuff to keep track of what they were doing. So what I've done is I've come back and I've started using this text editor and writing Markdown files and just writing literally everything that I do down. Like I used to have a little clipboard with sticky notes on it, and I did that because that was something that was in front of me. But now I spend so much time in my text editor, and I just always have one of these files open in my text editor that I see it there. And this is a much more effective way of keeping track of things, because I can make all of these to-do lists and all these different files to track all of these different parts of my life, right? So, Emacs, that's something that kind of kind of stole from Emacs that is making a comeback more recently. I would say like since 2016, I'd guess. I'm kind of noticing that like I've jumped on a couple of trends in programming that have like been going for a long time. So like what is the next generation of that stuff going to be? Because I kind of feel like we're at a transition point and I don't know where it's going. So let me come back. When the news is out, it's already too late, says the Wolf of Wall Street. Well, sometimes, but not always. So it's a thing that you just got to come back to. Like the key falsehood at the center of like everything in markets and our economy that people need to understand is that the market is not efficient, right? So all of these things are assumptions based on an efficient market. If a market is efficient, then when a piece of information comes out, the market should have already priced it in correctly, right? Well, the market tries to do that, but it's just not very good at it. So it's always off of the price that it should be. That's really important. Now you're gonna get me ranting. I got 5 minutes left. Maybe you'll veer me off onto some other subject if you ask a really good question. But I'm gonna go into my rant, man. Okay. Because here's the thing, if the market is perfectly efficient, then you can just let the market handle everything, right? Okay. Which companies are contributing value to the economy and which ones aren't? Well, which ones have the best stock price? Which ones are growing the most in stock price, et cetera, right? If you do something, you make a policy change at your company, like let's say you lay a bunch of people off, and then you go and you see how the market reacts to it, the market moves up, that means that the decision that you made was good. And we can trust that because we know that the market is perfectly efficient. And if that thing was not actually good, then the market would factor that in and take that into account. And it would take that into account at all time frames too. Like if it's a good thing in the short term, but it's a bad thing in the long term, then the stock should still go down, right? Because it factors all that stuff into the prices and the option, and there's options and all that sort of stuff, right? And so we've built this system around this mythology that we can trust the market. But the reality is that the market is not efficient in the least bit. And it's not until you get out to like a 3 to 5 year time period that it's actually efficient. And so what's been happening for the last 30 years or so is that we've been making all of these decisions based on the feedback that we get from the market and not realizing that feedback that we're getting is complete nonsense. It tells us absolutely nothing about, well, it doesn't necessarily tell us anything about the actual fundamental nature of what's going on and what that asset is actually worth, because the feedback that we're getting is only a factor of the people buying and selling. And the average person is starting to figure it out, because the average person goes and looks at all of these stocks that they don't have any earnings. Like the future of that company looks incredibly bleak. It shouldn't be worth anything. Like AMC, I think, is a really great example of, a bunch of people piled into something that really doesn't have a very bright looking future, right? But why does it go up? Because you all bought it. And it has nothing to do with the real value of the stock, right? So if that doesn't, if the market is inefficient in that form, then what does that mean about all of these other political decisions that we make? Especially things like how we lay people off, how we deal with employees. Like this whole thing that it's easier to increase your salary by switching to another company, and companies aren't willing to pay up to pay you for the experience and keep you there. That's part of that, right? Because they get rewarded for cutting costs down as much as possible and letting the finance guys come in and take over everything. And that's how you get stuff like Boeing. freaking Boeing got taken over by the finance guys, and it wasn't we're going to be the best engineers ever anymore. It was we need to cut costs here and here and here so that we can make the most money. Well, yeah, so that you can make the most money in the short term because you have all of the stock options, but obviously it wasn't the best thing for the company in the long run, was it? How do we make the best decisions for the company in the long run? We have to just do what we know is correct based on our understanding of the world and ignore what the market thinks. Right? So in order to get to better capitalism, because capitalism, having a market, having the ability to bring buyers and sellers together and negotiate on price and have the prices based on the supply and demand, because it's really like getting the resources and getting them to where they are needed. That's the first big problem, right? Capitalism solved the first big problem. But to get to a better version of capitalism, we have to destroy this idea that the market is perfectly efficient, because it is not, and it is the most harmful thing in our economic system today. So anyways, time for me to go. I wanted to go into some more programming stuff, but you know, we did it on that one strategy, and I guess that was good enough. I know you guys enjoyed the discussion on text editors. I'm wondering here, what would be the next thing? Maybe I should be working on the transcription robot. Once I'm done with the, I have a video script for Momentum, but I want to review it with ChatGPT. Then I need to do the transcription robot. I also have a video written out for the chair, but I haven't, I need to go back and review that one too. Yeah, that's what I need to do. What language should I learn for trading AI? Python. Easy peasy. I don't really think that there's a super great language for this sort of stuff right now. Python is not actually well suited to it, but that's what everybody uses. So you want to do AI stuff, use Python. Yeah, there you go. Because people think it's an efficient market and such is also why they believe that since they fool buy and such, the price goes up. So they actually think it's worth so much more. I think I actually getting at what you mean, and it's bad. Yeah, that's the Bitcoin is the perfect example of that, right? So you come in and you say Bitcoin is fundamentally bad for humanity, and then they will say, but number goes up, that must mean Bitcoin good. But all the number going up means is that you fooled a bunch of people. It doesn't actually tell you the real social value of it. I give you another example, okay? Something that boomers tend to believe is that being rich is virtuous. That if I make a lot of money, that means that I'm valued very much by the market. And because the market is perfectly efficient, that means that I'm a very valuable person. But that's not what it actually means, right? It's only a function of the orders put into the market. It's a function of supply and demand. So what it really means is that what you were doing was in high demand and short supply, and therefore you got paid a whole lot. And it doesn't really actually say anything about your fundamental contribution to society. Some of the people that are contributing the most to society don't get paid jack squat, right? So being rich is not actually virtuous. It might mean that you just got lucky. I mean, there's a connection, but it's a very loose connection. So what really makes you valuable to society is what you've actually done. And we shouldn't expect that the market will necessarily reflect that. So that next time you see other people and they're not as rich as you are, that doesn't mean that they're worth less, because that's what people think. But it doesn't mean anything. They could be worth way more to society, but the market is not perfectly efficient. So You see? Like I guarantee, once you really start to think about it, you'll realize that like all of these problems that people complain about in our society today, you can trace back to the fundamental idea that the market is efficient. Right now, all of the liberals are complaining about Jack Welch. They gutted corporate America with this, Reagan era. Well, the reason that they did all those things that they did was because of their belief that the market was perfectly efficient. It's a teensy bit paradoxical, though, because at a certain point it would make sense to invest right, even if it's puffery. Maybe why institutions are starting to invest right. Regardless of if it's useful or not, hedges are down to degenerate investing, trading like most new retailers at a certain point. Well, yeah. I mean, the more inflation there is, the more that speculation and that kind of fervor takes over the society, and people spend less time doing things that are actually productive to the society and do the thing that is making the money at the time because they're afraid that they're going to get left behind because of the inflation, right? And you're definitely seeing a lot of that right now. And the reason why I am concerned about inflation coming back is because I can see how easily everybody turns back to the I need to speculate to get ahead. Right? That says to me that the air hasn't actually been let out. Now, the issue is with some of these things is that if the price is a function of the orders that are put into it, okay, so a lot of people are putting money into it now, but will they always be able to continue to put money into it? If the only reason that people are putting money into it is because it's going up, then what changes when it stops going up? You have a day or a month where it goes down, and that's how market bubbles come and go, right? Because the only thing that was keeping it going was because it was up. Then eventually, it stagnates and all those people bail. And that's why when Bitcoin crashes, it crashes like 80, 90%. Can I use ChatGPT to code AI trading? Probably not. The artificial intelligence is very prone to hallucinating things, and so the code that it's going to give you probably won't compile. It will tell you things that are just objectively not true. You can't trust it. So if you want to code things, you're going to want to write your own code. They're not to the point where the AI can do it all for you, unfortunately. Maybe someday, but that's probably still a long ways off. So we're going to get started step by step. I would search for machine learning in Python. There's actually, I remember watching a video series that was like, Python is really easy to trade with, or sorry, to write stuff in. But that stuff that you're going to get there first, they're going to show you like, okay, here's this data set of people on the Titanic. Can we predict whether or not they would live? And then you use the machine learning to figure out a way to predict who would live and who would not. That's the sort of stuff that we're talking about, right? Right. And then I would recommend, so there is Andreas Klenow. He has a book called Following the Trend, Diversified Managed Futures Trading, right? Where he talks about like how does a momentum strategy work? But then he has another book. What is it called? Oh, where's his other book? No, I don't want the name of the title. I want Klenow, author. Oh, I know he has another Andreas Klenow. Is it Stocks on the Move? No, I don't think it's that one. Trading Evolved. There you go. Trading evolved. Anyone can build killer trading strategies in Python. Huh? So then it shows you how to write in Python a momentum strategy. And that's the way that we go. Yeah. Okay, guys, I'm like 5 minutes over. I will see you Monday. Enjoy the weekend. In the meantime, stay excellent.